It's called a bear market when stocks drop by 20% or more on main indexes. It's time now for business. We say hello to Yuka Royer. As Donald Trump doubles down on his tariffs, the markets keep tumbling.
Well, it's been indeed a chaotic start of the trading week. Wall Street opened sharply lower, then briefly spiked into positive territory after a report circulated on social media that the National Economic Council Director Kevin Hassett told the media that the president was considering a 90-day pause on tariffs. The White House then refuted that as fake news, causing stocks to tumble again. Donald Trump's 10% baseline tariffs on all trading partners took effect last week, as did the 25% duty on car imports, sending shockwaves through global trade. Much higher across-the-board tariffs on some 60 nations are due to come into effect on Wednesday. The US president has doubled down on his plan, and as stock markets plummeted, he took to social media to say, "Don't be a panicking," a new term he coined to refer to people who he deems as weak and stupid.
The United States has a chance to do something that should have been done decades ago. Don't be weak, don't be stupid, don't be a panicking. Be strong, courageous and patient, and greatness will be the result.
Well, while defending his tariff action, Donald Trump acknowledged it will cause some economic pain, saying sometimes you have to take medicine to fix something. Markets are fretting over just how bitter a pill the global economy will have to swallow. One good indicator of market volatility is the VIX index, known as Wall Street's fear gauge. It jumped to 60 at the start of Monday's trade and then went down quickly on reports of a tariff pause, then spiked again. The higher the figure, the more worried investors are. On April the 2nd, the figure was around 21. Now it's over 50. According to a market research firm, figures above 40 are rare and indicates a crisis level. Now on the stock market, the Nasdaq briefly jumped into positive territory before reversing the trend, but overall, Wall Street appears set for a third straight session of losses. The S&P entered a bear market, meaning the index is down more than 20% from its recent peak. The tech-heavy Nasdaq already fell into that territory on Friday. European bourses ended the day deeply in the red, with London, Paris and Frankfurt all losing more than 4%. France's CAC 40 closed under 7,000 points. Germany's DAX fell well under the 20,000 mark after starting the trading day down 10%. Asia started the week in what some described as a market bloodbath. Hong Kong plunged more than 13%, the sharpest one-day decline since the 1997 Asian financial crisis. The Tokyo Stock Exchange triggered circuit breakers several times this Monday to briefly suspend trading, and the Nikkei closed down 7.8%. That's the third biggest one-day drop on record.
So are the Europeans, and we'll be asking the question to our panel in the France 24 debate, are they hitting the panicking button?
Well, I mean, at least Europe still wants to prioritize negotiation over retaliation. However, it may take some time to get the EU's 27 member states on the same page, even as Washington indicates that it has a problem with other non-tariff trade barriers. Luke Schrager has more.
For the European Union, negotiation is better than retaliation, with the bloc making the United States a new offer over tariffs.
We have offered 0 for 0 tariffs for industrial goods, as we have successfully done with many other trading partners, because Europe is always ready for a good deal.
Also on the table, however, is Europe's willingness not to back down from defending its interests, with a meeting of EU trade ministers discussing possible countermeasures in Luxembourg on Monday.
I think that we must not exclude any options on goods and services, whatever the approach, and open the European toolbox, which is very comprehensive and can also be extremely aggressive. I am thinking, of course, of the anti-coercion instrument.
A means to punish countries using economic threats against the EU, the anti-coercion instrument would target US services and limit US firms' access to public procurement tenders within the bloc. However, other member states more exposed to US trade are reluctant to use what's being called a nuclear option, revealing work yet to do before they can present a united front. At the same time, Washington has indicated it wants the EU to lower non-tariff barriers to trade, like food standards regulation and value-added tax, a non-starter for Brussels.
There are more than 160 countries which is using VAT. VAT is an important source of income for our member states. This is how we fund our state budget, and we are not going to change our VAT system.
For now, 2 waves of European tariffs on US imports are set to go into force over the next 5 weeks, a response to US levies on its steel and aluminium.
You mentioned that 13% drop in Hong Kong. A lot of this is the realization by investors that escalation is here, and we heard more of it after the Chinese said they were retaliating.
Yeah, well, I mean, the tensions just keep escalating, and retaliatory measures keep coming. So again, in a social media post, the US president threatened to impose additional tariffs of 50% on Chinese goods effective Wednesday if Beijing didn't cancel its retaliatory measures. The Trump administration imposed 2 rounds of 10% blanket duties on imports from China in February and March on top of existing ones. And then last week, as part of his Liberation Day tariffs, the president announced an additional 34% levies on China. Beijing responded with a 34% retaliatory tariffs, plus more export controls on rare earths minerals, and filed a lawsuit at the World Trade Organization. Meanwhile, Vietnam, which was hit with particularly high tariffs of 46% last week, urged Washington to pause them, offering to remove all tariffs on US imports. But earlier this Monday, Trump's trade advisor, Peter Navarro, said that wasn't good enough. The Southeast Asian nation is one of the fastest growing economies in the region, as in part helped by the so-called China Plus One supply chain strategy that businesses took to diversify manufacturing operations outside of the Chinese borders to mitigate risks.
Something we'll be following as well. Many thanks for that. Yuka Huaye will be back for more on a very up and mostly down day of trading. It's time